I'm Jess Carson. I work alongside ERPfixers. Today, we are going to be presenting Reorganizing Profit Centers and SAP, presented by the lovely Dawn Watts. Today is December 9th, 2020. For those of you who are just now joining us and unfamiliar with how this process works, we will be having a live Q&A at the end. So if you have any questions, please submit them in either the chat box or the Q&A box. I will be recording them throughout the presentation, in which if we have enough time, John will be answering those questions for you. Now, if we cannot get to the questions at the end, do not worry. We will be posting the Q&A to our website at www.ERPfixers.com about a week from today. So what is ERPfixers? We connect you with SAP experts to obtain quality immediate solutions for your SAP system. We consist of thousands of SAP freelancers globally in all SAP modules who are ready to help and assist with their knowledge in SAP. We offer an online platform, SAP optimization assessment, material ledger, S/4HANA transitional roadmap, and cost transparency reports. For more information, please visit ERPfixers.com. About Dawn. Dawn Watts is a talented SAP subject matter expert. She has led support and implementations of SAP functions in finance and controlling for over 17 years. She has a breadth of experience partnering with finance and logistics organizations to solve complex problems for manufacturing companies in the telecommunications, medical devices, flooring, industrial, and energy industries. This is Dawn's first webcast, so please, everybody, welcome her in today, and we're so excited to have her. Thank you so much, Dawn, for joining us, and go ahead and get started on your presentation whenever you're ready.
All right, thank you so much, Jess, and thank you to ERPfixers. I'm really excited to be talking about this topic and partnering with ERPfixers in sharing my experience and my knowledge in this space. So, reorganizing profit centers in SAP. It's something that I'm pretty passionate about, and I'll go into some background and talk a little bit about profit centers first, and then we'll get into what it takes to basically go about a project of reorganizing profit centers in SAP. So first of all, kind of a level set, because everyone may have, or different people may have different experience levels within SAP and with dealing with the different finance functionalities and reporting elements within SAP. So first of all, what is a profit center? So a profit center, as defined by Peter Drucker originally in 1945, was really meant to be a way to separate your business. So you can really break out and have an approach of having a company within a company and really look at your profitability as well as your balance sheet by this reporting element. So for SPX Flow, what that's meant for us is that we have product lines that are roughly aligned with our product hierarchies, and those represent our profit centers. So we have changed throughout the years, and we were looking for a way for our business to basically realign our profit centers and really align that with how we manage our business now versus how we managed our business 5 years ago or 10 years ago. So within ECC 6, SAP enabled a functionality called New GL, which is fundamental for this profit center reorganization functionality. And this allowed that P&L and balance sheet to be created in real time, the P&L and balance sheet by those areas of responsibility. And so once they've done that, they also layered on top of that with Enhancement Pack 5, a functionality called Profit Center Reorganization, which actually allows you to then, as your business grows and changes, you can actually change that profit center and that reporting throughout your P&L and your balance sheet. So let's talk a little bit about integration points as well. So Profit Center is integrated throughout the SAP system. Being an ERP, you have all of these different functions that are within this integrated system. And the Profit Center is carried throughout all those functions, all those sub-modules and processes. So these are just some integration points that we look across this. Materials being a big one, sales orders, profitability segments, cost centers, all of these objects carry a profit center. So it's not as simple as just changing a data field. You change the data field, but it has all these connection points. So the profit center reorganization functionality enabled the ability for basically the first time to change that field across all of these objects and make sure that all of the related integrations were covered as well and the balances associated. So we'll get into a little bit more about that on the following slides. So let's talk about some scenarios, right? So the profit center reorganization functionality as enabled in ECC 6 and Enhancement Pack 5 assists you in approaching how you want to divide up, combine, or replace your profit centers across your system. So the scenario that I've come across twice now is that we want to actually divide up a profit center. And I've given an example on the right-hand part of this slide, which shows going from one profit center to many. There are other options. You can combine, you can replace. I haven't seen as much combining, although SAP mentions it in their help documentation. Because if you really needed to combine, you could roll that up in your reporting. Just take two profit centers and roll them up in a hierarchy. However, it is an option if you need to bring something together and you really want to change that data. So let's talk about the process, okay? So you really need to be closely aligned with your business and your IT group if you want to embark on a project like this. You need to be basically in lockstep, communicating as you go throughout the process. But the process usually starts with a management decision, okay? Management says, we want to change the way that we are reporting as it's based upon profit center. We want, in this case, I put a split. So we want to, similar to the previous slide, we want to split those profit centers. So the management has made that decision. Then they reach out to IT or their consultants, whoever's helping them, saying, how do we do that within our SAP system? So the IT organization gets involved, and you start going down that process of, we have to set the system up first. We have to refresh data because this is a very data intensive project. And we also need to make sure that we're up to date on all the technology, all the OSS notes and patches and everything that need to be prepared in the system in order to embark on this. Once you've gotten those two pieces aligned with the management decision and the IT involvement, then you can embark upon that reorganization. So you have that in place. You put together your requirements, you've documented it. In most scenarios, you should have your requirements document. And then you go into, okay, let's set up the plan. Let's create it. Now we need to understand, okay, what do we want to map from and to, and start down that process of loading those changes. Then once you've got that in place, you can go into your change process. And then once you've changed your records, you want to validate those results. So again, working very closely between your business and usually your finance teams and your IT or consulting teams. This is another view that really gets into all the steps of the reorganization itself. So as with SAP, it's very organized and structured around the steps that you have to take in order to accomplish your goal. So again, you start with that creation of the reorganization plan. Then you're going to go in and you're going to generate a list of objects. You're going to assign your new profit centers once you've generated your list of objects. And then all this, you'll note, happens before you get to your actual reorganization date. So then once your reorganization date has passed, then you'll go through the steps of reassignment, transfer posting, and then into a review and post-processing mode. I'll go through these steps in a little bit more detail in the next slide. This is a good overview as you walk through these pieces, but I wanted to also show you some screenshots and some pieces around some flexibility within the steps themselves. So again, going back to creating your reorg plan. You create your reorg plan, you give it a name, you give it an ID, you want to select what the date is that you're actually going to complete your reorg or have that as your set date for the reorganization. So that will be referenced in the transactions, the financials that update and the balance transfers. And then you want to give it a plan type. Plan type here is for profit center. There's also an option for segment reporting, which is why there's a plan type. And then a hierarchy version. We'll get into that. That's a really fundamental piece of this. And then general restrictions. So general restrictions, you're really looking at what was your old profit center and what's your new profit center or list of profit centers. So you go through and add all your mappings throughout your reorg process. And there can be a lot. So be prepared for the different combinations that you may enter in. Then once you put in your created that reorg plan and that foundation of this is my basic information, these are my restrictions, then you go about generating your object list. So this is going to take some time to generate your object list. You basically have to go down your derivation hierarchy, which very closely aligns with those integration objects. And so you go down that object list and you're going through and generating those lists of objects. The one thing to note is when you're looking at your object list and you're looking at it in the generation button, there are different buttons as you go across the reorg. The generation button is only going to generate the first level objects in the hierarchy. And we'll look at that and talk about that a little bit more as we look at the derivation hierarchy. So then, once you've generated your object list, you have to go out and actually assign those objects to the new profit center. Now, if there's a one-to-one mapping, then the system and the program will automatically assign the new profit center. But if there's a one-to-many, you really have to tell it what profit center is to be assigned for those objects. And that can get a bit intensive with a lot of data. So there are some enhancement spots within the program in order to add your logic to automatically determine that profit center and approve that profit center and then assign it for further processing. So all of these steps occur before your reorganization date. The reorganization date is the first day of your fiscal month. Now, let's look at these reorganization steps with what we call a phased approach. So 2 slides back, I talked about this is, the full life cycle. But there's also an option to take what we call a phased approach. And in some cases, in our company's experience, our first reorg, we decided that we were going to go big bang and reorganize everything on the first day of the new period. So we actually asked our businesses to close early, and we went through, from a financial close process to close early, and then we went through and processed our reorganization on that weekend. However, there is an approach, and this is what we utilized in our recent reorganization, to use a phased approach. So what this means is that you have a reorganization date that is on the first day of the new month. You've gone through in the previous steps up to your reorganization, you've generated, you've assigned. This is an iterative process because you're going to continue to have objects generated that need profit centers assigned to that. Well, after that reorganization date has come, you don't actually have to complete your reorganization on that date. You can go a little bit into the new month and wait and then process your reorganization later. So for us, the way that this scenario worked out was that we went into the next fiscal month, and that's normally when our financial close process takes place. We went through our normal close process, and then once that was complete, then we went about the steps of executing our reassignment and transfer postings to really change the objects as well as change the balances for this reorganization. So that staged approach works well because you can really support your financial businesses in completing their financial close, making sure that everything's taken care of, because you also, additionally, with the reorganization, you need to make sure that you've closed off assets, that your results analysis and settlement is completed. All of these pieces need to be done prior to your reorganization being completed. So with that, we recommend, and what our experience has been with the reorganization is that we actually have a quiet time. We basically shut all users out of the system in order to execute the reassignment and transfer postings. The reason that we've done this is that we don't want a lot of new objects being created while we're trying to go in and execute the reassignment and transfer postings. So it's a quiet period. We've shut down our operations for those sites, and we had like 10 sites for our latest reorganization. Shut down operations, we get in, we run these steps, and they are running in background jobs, as there are, it can be up to, hundreds of thousands or millions of objects that need to be reorganized. So we run those in background jobs, complete through the reassignment and through the transfer posting. And then we take a sigh of relief. Whew, that was a lot of work, and we have now completed this. Now we go to the next step of, we finished, let's go in and check, okay? So one of the checks that we take is, before we run the reorg, we run a trial balance, and after the reorg, we run a trial balance. Make sure that we're just transferring balances by profit center. We're not changing the financials from a statutory perspective. So that's one of the checks that we normally take as well. We go in and we actually update or review the objects individually. So we go in, we say, okay, is this sales order? Did it actually, did the profit center actually change? And make sure that we're validating the results. We don't actually update anything at that point. And then once we've reviewed it and everything looks good, we close the reorg plan. Just to note that if you want more information in regards to this phased approach, I have included a link at the bottom of this slide, but it helps you really understand that this reorganization can be handled with different approaches, and you can manage it to really align with your business processes. Now, there are some technical requirements. If you're going to embark on a profit center reorganization, there's some things that you need to have in place and updated in order to complete. So, first of all, you need to be on Enhancement Pack 5 for ACC 6 with the new GL. So this is on the backbone of the new general ledger. Also, you need to enable the business function, this FinGL Reorg 1. This will enable the ability to actually utilize the reorganization functionality. Also, it's recommended to activate a business function for fixed assets, which I've listed here. The other thing is that you need to ensure that your licensing is appropriate. SAP Help, I've listed the link at the bottom, has a breakdown of what licensing you need, including your NetWeaver and portal content. This functionality utilizes WebGen Pro or NetWeaver Business functionality. So you really need to make sure that you have the technical settings in place. Basis can enable that so that you can actually view this in more of a web front end rather than the typical SAP GUI. And that's what all the coding is built upon. So I would say make sure you work closely with your Basis team on that. That's something that we had to go back and forth a little bit on when we initially brought up the reorganization. Another point I'll make is that you need to update the system with all the relevant OSS notes. And there are a lot of them. So we, with our latest reorganization, we were on Enhancement Pack 7. Our first reorganization was Enhancement Pack 5, but most recently we were on Enhancement Pack 7. We still had 140 OSS notes that we needed to apply. And some of those include some ABAP involvement. So just to note that, go out, research the OSS notes that are relevant from your current support pack up to the most recent to make sure that you have everything applied. And also make sure that you have the appropriate security. So there are security roles that are enabled with this, and that's also in the SAP help documentation. These programs utilize background jobs for generation, reassignment, and transfer postings. So if you're not familiar with the usage of background jobs and parallel processing, you might want to get familiar with that if you're going to embark on this project. But those of us that have worked in the SAP space for a while are familiar with the results analysis and settlement batch jobs and background jobs and parallel processing and those pieces. It's very similar here. And I will mention in regards to those OSS notes, the 140 that we applied, a lot of the most recent ones relate to a simulation functionality that's been enabled since Enhancement Pack 5. And that is quite helpful. We did not have that in our prior reorganization, and it was nice to have in this reorganization and be able to really simulate and address some of the errors that we might encounter in a live reorganization. One other piece to note is that this functionality is not currently available in S4. So if you're already on S4, it's not available there. If you're not on S4 and you want to do a reorganization, I would recommend doing it before you go on S4, because the new Org Flex functionality for the on-premise version is scheduled for a release in Q4 2021, and that's just scheduled. It's subject to change. So that's directly from a contact at SAP, but just to note that that's not currently available in S4. All right, so as with most things in SAP, there's some configuration that's involved, and I won't go through all of the details of the steps of the configuration, but just note that you do have some setup pieces within the configuration in order to enable the reorganization. I will note, however, there is a baddie. Like I said, there's some room for automation. There's a baddie, I've listed it here, for the automatic assignment of profit centers during the generation. So going back to my previous discussion or my previous slide around the generation and the assignment, this will allow you to automate that assignment. So you don't have to download, hundreds of or thousands of records and manually assign those profit centers and load them. This will automatically do that if you have logic to drive that. As an example, we use the product hierarchy as a basis for our latest profit center reorg, because our product lines are aligned with our product hierarchy. Another thing to note is that you want to update any existing validation and substitution rules, because those can interfere with the reorg and you'll get error messages if those are in place. And you also look to update any defaults for profit centers by account. As an example, the FAGL3KEH transaction. So now, this is a fundamental portion of the reorganization is the derivation hierarchy. So the derivation hierarchy, similar to what we looked at from those integration objects, is the derivation hierarchy is really the basis for the reorg, and it really tells the system, how am I going to go about determining the profit center as we go down and look at the different objects. So one thing that you'll note of note on this slide is that the first level objects are listed across the top. So first level objects are those that come up in the generation. Those are, in our case, it was material, cost center, internal order, and WBS element. So these are your first level objects. And then related to those objects are your lower level objects throughout the hierarchy. So the sales order, as an example, will get its profit center from material and plant and the profit center associated with that. So it goes down through that hierarchy. Some other things to note that are interesting on this slide is the financial objects. So this is one of the, I would say, most interesting things about this functionality is that it actually goes and changes the objects, but it also will transfer the balances. So your accounts receivable, your DRIR, your accounts payable, those balances actually get transferred. And additionally, your assets, and any other pieces that are really related to those integration objects. Another interesting thing that SAP has added to the reorganization since our first experience with it were the GL open items. So GL open items, they're balance sheet line items where the account is flagged as open item managed. And so the reorg now allows you the ability to go in and generate, assign, reassign, and transfer post your GL open items. This was an improvement for us. We have a lot of balance sheet accounts that have multiple line items. And for us to go and transfer those balances on our own in our reorganization, our first reorganization, was quite cumbersome. But the most recent one allowed us to go through and really enable our balance sheets to be more closely aligned with our profit centers pretty much from the get-go. We had a few accounts left over that weren't open item managed, but this helped us significantly. This is another view of the derivation hierarchy, really in the Reorg WebDem Pro functionality. I made a note here that the generation, reassignment, and transfer posting buttons. So these are really the core steps of the reorg. But you'll see that when in the actual tool itself, it has these buttons as you go through the process. But on each one of those, I would say, tabs, basically associated with those buttons, there is a derivation hierarchy. And that derivation hierarchy is what you will use to go through the generation, reassignment, and transfer posting steps. So just a little bit of a visual here so you can see what it looks like within the Reorg tool. All right, so let's talk about testing. So I would say from my experience and our team's experience, err on the side of more testing rather than less, because this is a very data intensive type of project. We had basically, I would say, 4.5 cycles of testing that we went through within our last reorganization. So you really want to go in and get a good sense of the data that you're going to be reorganizing, as well as come across any errors that you might encounter early on in the process. So during this project, more so than most projects that I've worked with, you work very closely with the basis team to get your environments refreshed so that you have data that's ready for you to run a reorganization on. So here's the proposed timeline. Start out, you really want to do a proof of concept. Say, okay, I want to get into a sandbox environment and I want to do a proof of concept and see, okay, what does this look like? How long is it going to take? What does my data look like? Has my organization changed over time? What do I expect? You just get familiar with your system and your data and just working out all the pieces of OSS that's being applied and any bugs. So I recommend a proof of concept. Then once you've done a proof of concept, you can explain that and align with your business to say, this is what we can expect. And then you go about the different cycles of testing your data, your reorganization, and specifically your data. So in our organization, we did another refresh of our sandbox, went through another reorganization because we weren't quite ready to introduce the reorganization functionality and turn that on for our quality test environments. Because once you turn it on, it's not easy to go back. So we went through another round with a refreshed environment of our sandbox, got another sense of how things were going, and note that we went more detailed. So initially we said, we're just going to test the functionality. We're going to do a mapping. It's very basic. But as we get further along in the testing cycles, we want to really get our mapping fine-tuned so that we know this is the mapping that we're going to really go with in production. So went through another round of reorg testing in our sandbox, went through a limited development test because in my experience, your dev environment doesn't have refresh data or a lot of data that has a lot of quality to test. It's just really more to test your functionality, your programs, things like that. And then we went into our quality test. So it takes from our experience, about 3 weeks to go through a reorg cycle. So we ran through a reorg cycle, and then once we had completed that reorganization, we turned it over to our business to really validate the results and run through some test scenarios of what that looks like after the reorg. Take a sales order as an example and deliver it and bill it. Take it through its processes and make sure that everything is looking as you expect it to. Also, it gives you a good opportunity to send out that data to your business and have them validate. Are these materials all mapped appropriately? Does something need to be changed? Because our reorganization was based upon product hierarchy. If we wanted to change that profit center going on the next round, we needed to change the source of the data, which was the product hierarchy. So it allowed us to really send that data out to our business for validation. Then the last cycle of testing that we did was our dry run. I highly recommend our dry run. When I first went into this, I was a little suspect of, do we really need to do a dry run? Do we really have to have another round of testing before we go into production? But in our case, and in this project, it was important because we ran some snags in our quality test environment that took up more time than we expected. And we needed to really get another go at that data before we went live. So then, once you've done all this testing, you feel comfortable with it, you've had your project meetings and said, we're ready to go, then you go into the production environment and prepare for your reorganization. So, similar to my previous slides, you have work that needs to be done prior to your reorg date. You go in, you create your reorg plan, you start to generate your list of objects, you start to assign those objects, you move all along. Then your reorg date comes. You really should have everything ready for that reorg date that you can. So have as many objects generated, no errors on those, any warnings you've paid attention to, and you've actually gone in and you've assigned the profit centers on those objects. Your reorg date comes, and in our case, we said, okay, we don't want to complete our reorg until the weekend, next weekend. We want to let our financial close process go on during that week of the first week of the month. And then we're going to close all those organizations, and then we're going to go and do our reorg. So we went through that process, ran through, completed our reorganization, reassignment, and transfer postings. Now, that weekend and that activity is not for the faint of heart. It is pretty much around the clock effort. If you have your businesses and your operations shut down, as we did, you're on the clock and you want people to be rolling through and processing. So you really need some good resources who are knowledgeable on the reorganization process and who can take shifts to work through that reorganization and complete it. Then once you're done, you can breathe a sigh of relief and go about validating your data, making sure that everything looks good and you're ready to bring the system back up for those users come Monday or whichever day you're bringing it back up. All right, so some key efforts. Again, testing cycles. Make sure you have the adequate number of testing cycles and that you're updating your development, your test environments with refresh data. This can fall over if you don't have good data or if you have problems with your data. So the closer you get to having a production version of data, the better. Make sure you identify your profit centers and really lock down those mappings at some point and tell your business, this is our drop dead date. Up until this date, you can make changes to these mappings, but after this, no more. You need to go in. And that needs to happen in your test environment as well, because you don't want those changes going into production. You want to say, before I go into my final round of testing, whether that be your quality or your dry run, these are set in stone. These are the profit center mappings that we're going to have. And another point is validation. Once you've done your reorg, you want to run your validation, and you want to test that process as you're going through your systems as well. So just a note that make sure you have your validation process in place and you're prepared to run your befores and your afters and check your data. Some of the lessons learned from our recent reorganization. Have a good project plan. As I've recommended, 4 to 5 testing cycles with refresh data. One of the things that we encountered was an issue with security. There was a difference in security between our production and our test environment. So as much as possible, test with the security you have in production. Have a communication plan. Okay, if you are going to be working on data that's going to cross multiple plants, multiple organizations, you need to be able to communicate to those users and leaders within those business functions to, for them to understand what's coming and for them to review and test. Business leadership and involvement. In our latest reorg, we had a great leader for our reorganization, and we appreciated that involvement and that back and forth, really building that relationship, because as you go through this process, there are going to be key decision points that you need to make, and you need your business to be able to quickly respond. Set governance and ensure adherence to those profit center mappings. So if you set out and you say these are the profit center mappings that we have, don't let that change. We had a case where we let that change a little bit, and it brought in a lot more objects than we had originally intended. So be careful about that. Review all warning and error messages. This, you need to make sure. We encountered this as well in our testing cycle. So you want to make sure that you're looking at your warning messages and your error messages. Anything in your generation, your reassignment, make sure that you've resolved that before you move on to the next step, because that can impact your next step and impact the processing. Another thing is to execute activities in advance where possible. So if you've got GL open items in scope for your reorganization, try and clear some of those GL open items down before you go into your reorganization, because that just brings the volume down so that your system processes have less that they actually need to work through. Also, make sure you clear any errors between billing and finance, so VFX3 errors. Another recommendation is to connect with SAP support and consulting early on. If you're going to embark on this project, there's some OSS notes out there that you can review, but it's recommended that you let SAP support know in advance that you're going to be completing a reorganization, because you're likely going to reach out to them for help. Also, there's a great team of consultants that support the reorganization that work directly for SAP, and they will work closely with you on a limited scope engagement with our experience. You can do limited or you can do advanced, whichever you want to do, but they'll work with you closely to make sure that your reorganization is successful. Another point is to align with your BI and your interface teams. So we had our BI team, as a part of our project, and they were aligned throughout the project to make sure that when we were changing these objects, we weren't going to have BI failing because we sent out 1 million change records. So align with your BI team, have them test their extracts and all their pieces within BI and their reports. Also align with your interface teams. So you want to make sure that you test those interfaces in an integrated environment to make sure that, again, you're not sending 1 million records out to another system and causing the interface to fall over. So those are some of the recommendations and lessons learned that I have from my experience with the profit center reorganization and working with the team at SPX Flow. All right. I think I've covered a lot in there, but I'm open for questions. So I'll turn it over to Jess, and she'll open it up for questions. Thank you.
Thank you so much, Dawn. It was a great presentation, very informative. So we do have quite a bit of questions. I'll go ahead and start with the first few that we've received, and we can go from there. So first question, does screens of reorganization steps as SAP standard T code after you added OSS notes? And I apologize, I'm not sure if I read that correctly. If not, please let me know in the chat box.
Okay, I'll take myself off mute. So it sounds to me like the question is, is this a standard transaction code once you enable the functionality and enable the OSS nodes? And I would say yes. So basically, it's standard NetWeaver Business Center functionality once you enable it. You do need to add the security roles in order to use the reorganization. But once you've done that, you should be good.
Next question is, after the change in profit center, can we see change log from FB03 document level or just update the value from the table?
So one thing to note is that the reorg doesn't actually change an existing financial document. So FB03 generally refers to the financial document. The reorganization will actually transfer the balance. So it's basically one big journal entry. It goes credit this profit center and debit this profit center, or whatever the sign is. So it's not actually changing that specific document. It does, however, change the table behind it, right? So that going forward, anything relating to that open item, that AR item, it will actually pick up the new profit center and carry that forward. But it doesn't actually change that specific document in FB03. If you go look at it, it's still going to have the same profit center and the entry view and the GL view and those pieces.
The next question is there any way for us to simulate this change before individual posting?
Yes. So there is a simulation functionality within the reorganization. I would say that there's not an easy way to simulate it without the reorganization tool. So it's not like you can go and say, I want to do a reorg simulation, without the reorg tool in some report. It doesn't really work that way. You can go out and look at like a where used list. There are some transactions for that, but the reorg really simplifies this. It really puts it in a very organized view, and you can run through and simulate as you go along. But the other piece to note is that in our experience, we didn't simulate the whole thing. We would simulate the generation, then we'd actually run the real generation. We'd simulate the reassignment, and then we'd run the actual reassignment. So we didn't do a full simulation. You really want to do a good, clean test of it in your test environment.
How did you manage profit center updates on master data like materials, which were in stock?
So that's the really cool thing about the reorg, is that it'll actually allow you to update the master records and the transactional records without having to move stock. So a traditional approach, if you were going to change a profit center prior to the reorg, was that you had to take all the stock off the material and then go change the profit center and bring the stock back. The reorg doesn't require that. You update it allows you to update the tables directly and update those master data and transactional objects directly. And it also does the balances. It's beautiful.
So if the profit center reorganization is completed in the middle of the year, are the P&L balances for prior months reorganized?
That's a good question. So no, the reorg does not go back and reorg historical financials. It will reorg and transfer the balances for the balance sheet, and then your P&L balances and your balance sheet postings going forward will carry the new profit centers, but it doesn't go back and actually change the profit centers and the P&L balances for prior periods.
Are 4 to 5 full testing cycles truly required for this type of project?
I would highly recommend it. This is a very data intensive project, and you really want to make sure that you have a good sense of the data and that you're not going to encounter anything in production that you didn't encounter in your test system.
And last question, can more than one testing cycle be completed in a month?
So in my experience, we weren't able to complete more than one testing cycle in a month. It took us about 3 weeks to complete a testing cycle. But I have colleagues who work for other companies who have completed multiple cycles in a month. What I expect that would require, though, is that you have to be very closely linked to your basis team to make sure that you're getting refreshes on that system so you can go through and process multiple reorganizations in 1 month. Additionally, it's worth noting that not all companies choose to reorganize their GL open items. This is a newer functionality that SAP has provided, and it can be a bit challenging. So it really is up to you to decide what part of your hierarchy you really want to reorg and what's most important to your business.
And we did have one more question pop up, and feel free if you're still listening. We've got a little bit more time, so if you have any questions, just submit more. Is it possible to reorganize just for a specific list of materials and the related objects?
Yes, it is actually possible to do that. So you can actually put in your selections, you can put a list of objects that you just want to reorg to narrow it down. I would say that you want to assess that though. So if you have a list of 100 materials that you want to change the profit center on, I don't know if it would be worth to spin up the whole profit center reorg for just a smaller list of materials. You might look at the traditional approach of moving the inventory off. But if you have a list of 100,000 materials, then, you know, yeah, I mean, if it's across plants, it's the same material, things like that. It really is based upon your data set and what you want to look at. Additionally, it's worth noting that there are some performance issues when you start to put in specific restrictions on the reorg. So if you try to really restrict down to a plant, or, you know, it does start to impact the performance.
Okay, well, if there aren't any more questions, we'll go ahead and wrap this up. Once again, Dawn, I just wanted to say thank you so much for participating in our December 2020 webcast. We're so happy to have you. For those of you who might have some questions that come up later, feel free to email us at info@ERPfixers.com. And as a reminder, this recording of this webcast, as well as the answers to the questions that you guys asked today, will be posted on our website about a week from today, and that's ERPfixers.com. Okay, guys, have a wonderful week and a happy new year.
Thanks, Jess. Thanks, everyone.